Hey guys, welcome back to the channel, and today we're going to be taking a look at Apple stock. Now, most of the time I focus on technical analysis with a company and I tell you if they're going to head upwards or downwards, but today I want to talk about why I don't see Apple as the greatest company to be trading right now, why I would really try to stay away from this stock for at least the next few months until 2021, and what other companies I'm watching instead. So just to get started on that, I want to show you guys the crazy amount of price growth Apple had over the last few months. We're talking about lows at around $55 all the way to highs at $137. That's a price growth of around 160% in only a year. And a lot of investors are starting to realize that Apple might be a little overbought. Now, we have seen them consolidating for the last 2 or 3 months, ever since they came up to around this $140 price tag. And since then, it seems like the stock just cannot stay strong enough to retest these levels or even near levels of around $130. So it's going to be very critical for this stock to really identify what they've been doing to see whether or not it's going to be a good position for the future. Now, what the stock has been doing over the last 3 or 4 months is very obvious consolidation. Now, if you are very familiar with technical analysis, you know that when a stock is in an upwards direction, they're going to be making consistently higher highs, and when they're heading downwards, they're going to be making consistently lower highs. So what we're seeing right now is lower highs. Every time this stock makes a new peak, it's lower and lower, and what that shows is that we are in a consolidation pattern where there's going to be a lot more sideways movement here on the stock than upwards movement or even downwards. Now, we have seen this 104 hold as a very clear region where buyers are going to step in on the stock and think they are getting a good price. And over the last weeks, you can see that price has tested around this 104 range and bounced very strongly. It's done it already twice, but now we're getting towards the end of this wedge. And what that can really mean is even more slowing down in price action. I think that we're going to be trading within this wedge for around the same time that we were trading in this beginning part of the wedge. So that's going to be looking at around 2 to 3 weeks of price action, at least before we even see a considerable move on Apple. So guys, just keep a close eye out on this situation with Apple stock, because as the volume slows down, it's going to be harder and harder to trade and profit from this company, especially if you are a swing or day trader. As the price action slows down, as the volume slows down, the strength of these candles gets smaller and smaller. And you can see that as we've been coming up here, it seems like the candles are getting a lot more melted. Now, what that means, melted candle, is when a stock opens up at a certain price, then through that day they trade up higher or below the opening price, then the size of the candle's body will change. Now, if a stock goes all the way up to a certain price but doesn't close at that price, then that's what causes this melted look on the candle, because the stock at some point in the day traveled to this price, but by the closing of that day, they were closed at a different price. So that's what really the melted candles show you, and that's why I look for melted candles to give me an indication of where strength is failing the price. And you can see that that has been happening very consistently, either at these highs or at these low prices, and the most recent time was around here at the 108. So what this is showing you is that maybe there will be some more bull strength around this 108 the next time that we test on it. But my personal opinion on this stock is that you should not trade them until they are in a clear direction again, either clearly heading upwards or clearly heading downwards here, because it's one of the stocks that has most ran up over the last few months, and there's going to be a lot of investors that are unsure on how to proceed with this stock. It's causing the stock to have lower volume, lower breakouts, lower movement and price action. And what this means for options contracts is that they are going to have lower price and lower money to really collect from your trades. So it's not going to be good for options investors. It's not going to be good for people who like to invest with shares or stocks, because every time we bounce, you're getting a smaller and smaller return on your money, until eventually you might lose money if the stock goes against you or if the trade goes against your direction, because of the way this is consolidating. So guys, listen, if you are in on Apple stock, if you're in profits, I would recommend taking your position out. Consider putting it towards another stock that is continuing to grow, like NIO, like Blink, other stocks that we talked about on the channel here, Plug, AMD, etc. All have had some great growth in the last few days. Boeing. So there's a lot of great options here, guys, that you can be trading that aren't looking so flat and so sideways like this. And that's basically going to be my main point about Apple stock. Obviously, they are one of the hottest companies this year on the stock market, all time, etc. But right now, they are in a clear period of consolidation. If you are looking to trade a stock, just because you know the name Apple doesn't always mean that it is the best option for you to trade, whether you are a new investor or someone very experienced. So just keep a close eye out on these things, because you could potentially be in a much better position, a much safer position, something more guaranteed to make you a return in the short and long term, and not have to be looking at your portfolio every single day, wondering whether this company will move at all or if they will just remain flat like what they've been doing over the last few weeks. So you need to take into account what a stock has been doing historically, especially what it's been doing in the short term, to get a good idea of what will be happening long term. And with Apple stock, the short term analysis on the company is really telling me that this will not be moving for the next few months. It will be having to consolidate before we make a breakout, either the upwards or downwards direction. And this is going to cause a lot of traders to become frustrated, leave the position, etc. It's going to make it so that other stocks are showing much greater value. And that's not going to be good for the long-term outlook of a stock, not going to be good for short trading, day trading, swing trading, any type of trading. So that's why I'm looking to other stocks here of the next 4 weeks, next 5 weeks, while we do close out 2020. And in 2021 is when I will be reconsidering whether or not I can trade this stock, whether or not the volume is even there for me to make a trade, or if the price action is correct for me to jump in on the stock. So as always, guys, thank you so much for watching. If you want to do technical analysis similar to what I'm doing here, TradingView.com is the platform that I'm using, and you can find the link to join for free and help out the channel in the description below. Remember, also Discord link down in the description for free daily signals and plays, so you can join that for free and join the community there. As always, guys, thank you so much for watching. Don't forget to like and subscribe the video to stay updated, and I hope all your trades are in the green.